Welcome everybody to 15 Minutes of Finance, where the next 15 minutes, I'm going to get you excited about investing. Let's do it. Okay, guys, today we have Monday markets. We're going to talk about what's happening this week. Not a whole bunch. And because of that, I wanted to add the next up on our stocks to watch list. Guys, we have been doing this for years now. We were audio only. Okay, so we are now on YouTube. As you can see, we're growing slowly, growing pretty good. But we have thousands of listeners on our audio only at Spotify, Apple, anywhere you can listen to. Shoot, we're on Audible. Anywhere you can listen to podcasts. So we've been doing stocks to watch for a long time. And we've had picks like Palantir, SoundHound, NVIDIA before it was cool to have NVIDIA, Costco, Waste Management, AT&T when it was at $15. What else have we had? ServiceNow. It's leaving me. What else have we had? We've had Kava, though Kava's it ticked up massively and dropped back down. We've had a whole bunch of picks. All right. I'd have to even go look through it. We try to do one a month, and we're adding a stock today to the stocks to watch list. Really, really excited about it. We're going to do the who, what, where, when, and why you should invest. And I promise you'll get some value out of it. And I promise it's probably a company you haven't heard of, which is extremely valuable when you're looking for insights from professionals. Okay, let's start with the term of the day, which I actually have a quote. And I found this and I loved it. I loved it, because if you've been listening, you know I am not the world's biggest fan of PE ratio. And it is easily the number one thing that analysts, CNBC head figures, even YouTube finance guys, PE is something that people harp on, and I think it's a massively overrated stock. It is a very good measurement of where something is at right now. Okay, of right now, right today. But so I'm trying to lose weight, right? I'm trying to get back into my college basketball playing days shape. I would tell you, right now I'm out of shape. Sure, I can't run a 6-minute mile right now. And I go, but I'm telling you, I'm working hard on it. I'm working really hard at it. And that is exactly what PE ratio does, is it goes, oh, look at him. He's out of shape right now. I go, that's not how this works with investing in a company. All right, that's why it's called investing. You have to know what it's going to be worth later, down the road. Okay. And this quote, I think, sums it up beautifully. And it's by Philip Fisher. Okay. The stock market is filled with individuals who know the price of everything, but the value of nothing. Oh, that gives me chills. It's so good. Okay, the stock market is filled with individuals who know the price of everything, but the value of nothing. I think that quote sums up how pretty much every professional who wants to cover their rear ends on these professional sites, TV shows, they want to say things that are quantifiable. It's like, yeah, sure, Palantir's PE ratio is horrible, right? NVIDIA's PE ratio isn't that great. Even the companies today, well, they actually don't have one because they're not profitable yet. But you can't have a PE ratio if you don't have earnings per share, right? So if you're negative earnings, then you can't have one. But those PE tells you where things are at right now, but you don't invest in things for what they cost right now. Otherwise, you wouldn't be investing. What's the point of doing that? All right, let's read the news really quickly. And I'm sorry, I got a runny nose here. Let's do this. Okay. Market Mondays. Stock investors continue to downplay the U.S. government shutdown. Very true, because not a big deal. Stocks are mostly higher Monday morning after the three major indexes recorded weekly gains of at least 1%. Awesome. The tech-heavy NASDAQ recently was up 0.4% following the news that AMD was partnering with ChatGPT. ChatGPT maker OpenAI on a massive chip deal. AMD shares soared 35%, while those of chipmaker rival NVIDIA slipped 1%. The benchmark S&P 500 and blue chip Dow Jones Industrial Average, which both set closing records for a third consecutive session Friday, were up 0.2% and down 0.1% respectively. Investors mostly have taken in stride the government shutdown that began last Wednesday. Friday's key jobs report wasn't released, and the lack of data complicated decision-making for Federal Reserve officials, who meet later in the month to decide whether to lower interest rates. Not a big deal. If they don't lower interest rates this month, not a big deal, right? They will next month. Gold, or they might, it'll be soon, I guess is how we would say it. Gold futures gained 1.3% to $3,960 an ounce after hitting their latest record of nearly $3,975 early Monday. Bitcoin was up nearly 2% at an at about 124,900 after setting a new record of more than 125,000 over the weekend. Remember, we love crypto, not allowed to advise on it. Can't stand that. It's not regulated. The SEC won't let us, but I can tell you personally, I like it. Okay. I'm an XRP fan. Okay. I'm an XRP fan. I like Ethereum. I like Bitcoin. Sue me. Okay. Sue me. Do I know in detail all the things I need to know about crypto like I know about stocks? No. And nobody does. Crypto is one of those mysterious investments. However, I can tell you that as things get digitalized and as things go on the blockchain, we're going to get tokenized stocks. Okay. So I'm trying to learn as much as I can about that, about the crypto space, because I promise you in the next 10 years, probably not going to be trading on exchanges. We're probably going to be owning tokens. And once you own tokens, that means you can trade 24 hours a day. Once you can trade 24 hours a day, that's going to really change the entire game and it's going to shake Wall Street up. So that's my admittance of I like crypto. Do I really understand it? Not as much as I'd like, but I do know where the future of the stock market is going, and it is the direction of crypto. Okay. Let's see. Let me talk about Palantir. I didn't even know they had this in here today. We read the news at the same time, guys. You guys get the real life, real reaction here. Palantir shares, which sank 7.5% Friday to lead the S&P 500 and NASDAQ decliners, following a report that the U.S. Army warned of security problems in a new battlefield communications network. It is developing, rebounded more than 4%. Obviously, it rebounded. This is what I don't like about a lot of these reports. So CNBC, Schwab Network, they were taking over the Palantir bad news on Friday. It took me 35 seconds to find the report that they were talking about. And it said, this is a prototype. What is the point of even making that information public, Army? Or whoever, I mean, it says the U.S. Army, but also don't come for me, all right? I'm innocent. I don't get the point of saying, it's basically just talking trash about something that hasn't happened yet. It means nothing to me. If I would have been in office right before close, I would have bought more Palantir that it was down 7.5%. All right. And I would have bought it for all of my clients who were aggressive, even though our average share price for Palantir is like $18. All right. Keep that in mind. Okay. I want to talk. We're done. We're done with the news today. Let's jump to stocks to watch, the who, what, where, when, and why of, I hope that wasn't too loud. I was doing the drums. Hippo. Hippo, ticker HIPO, Hippo Holdings. It is a insurance company. Woo! We hate insurance. Insurance is boring. It sucks. That's why it's worth investing in, not as a purchaser, right? I don't want you to go get whole life or universal life. Don't do that. And if you have that, really reconsider it. It takes about 10 minutes of the numbers to be summed up for you. It's summed up, multiplied, divvied up, whatever you want math-wise. It can be done in less than 10 minutes to show you why it's a bad investment. Okay, but now investing in an insurance company, look, my theory is I don't like smoking. Okay, I'm not a big cigarette guy. It was hammered into me when I was younger. I would tell people to go get your bag, invest in Philip Morris. Okay, they're like the Marlboro holding company. They're like the biggest cigarette company in the world. Go get your bag, invest in it, even if you don't smoke. All right, that's how I feel about it. So when I hear insurance and when I think about insurance companies, that's my perspective. Go get that bag, girl. Go get that bag, boy. Okay, so Hippo, the who. Okay, so Rick McCathron, that is the CEO. Leadership is important. Remember that. You have to know who's leading the company. Okay, Jensen Huang, you have Elon Musk, you have, I don't want to say Peter Thiel. Gosh dang it, why am I forgetting his name? CEO of PLTR. I should know this. Palantir's our company. Alex Karp. Alex, I'm so sorry. Okay, Alex Karp, Elon Musk, Jensen Huang. We have to know these things. Those are the leaders that where they go, the company goes. And you really have to remember that. Okay, so Rick McCathron, he's got extreme experience with multiple insurance companies. I really, really love that. He's not old. He's not ancient. Everything about the insurance industry, guys, is boring. It's one of the oldest industries in the entire world. Boring. Boring, boring, boring. So when I see young and hip CEOs running these old companies, gets me excited because it means there's probably going to be a shakeup in the industry. Okay, so that's the who of the CEO of the leadership team. Okay, now we have what? What does Hippo do? They do homeowners insurance and property casualty insurance. That's very, very important, okay? Because you can pretty much insure anything, right? But they're starting in a space that is very, very not penetrated, I guess I could say. That with all the tech things going on right now, insurance is one of those spaces where you could probably, if you created a pretty nice tech stack, you could really penetrate and disrupt the market. And that is exactly what Hippo is doing. Okay. So property and casualty, and how do they do it? They are leveraging AI. Okay. AI. That is going to be the future of all these businesses. And Hippo is a great example of why it's going to be profitable no matter what. Okay. Hippo and the company Lemonade. But okay, where? They're in San Jose. And that means in California, they can do pretty much anything what they want. But they also have a unique platform company that allows them to work in 37 other states. So if you're familiar with how insurance works, it is not nationwide. It is state by state. And every state has their own regulations and rules. So the fact that they're in 37 is pretty darn good. 37 out of 50. And that's going to keep expanding as they adapt and grow. Okay. What else do I want? When? Okay. They came public in 2015. That's a really big deal because they utilize AI. Okay, so they saw in 2015, it's the same thing with Lemonade, right? Like Lemonade is that's their biggest competition. Lemonade is considered successful, even though they also haven't made any money, but they've entered into significantly more insurance spaces, term insurance, pet insurance. I can't remember quite else what they do. Whereas Hippo is earlier than that, and they just do P&C and homeowners, which I think gives them way more room to run. And they went public in 2021 with an SPAC, I think. Hippo did. So they're early. They're 2015. Think about being 2015 and thinking, oh, AI is going to absolutely come in and destroy the insurance space. Like, we're going to get ahead of this. And so why? Here's the big one, the why. This is what I want you to remember. The what and the why for you is very, very important. As an institutional professional money manager, I really like the leadership. That's important for me. And that actually all of these, the who, what, where, when, and why are important, but the why for you. Okay. The homeowner space, there are so many insurance companies. Okay. And they are archaic in their business models. Hippo is unique. And I'll just jump right to this. You guys see, look, I got my notes. All right. Where is it? Jeez, I'm old. There are my notes, okay? I got my notes here. I'm left-handed. Don't judge my handwriting. So in the insurance space, so the why you should care about investing. In the insurance space, there's really 4 main types of players. Okay, you have carriers. Think like Allstate, Geico, Northwestern Mutual, like they're the carriers of the insurance. And then you have reinsurers, which is what happens behind the scenes where all these other insurance companies sort of reinsure each other. Okay. And it's sort of like spreading the risk amongst everything. Do I like that? Not really. So what? And then you have MGAs, master general agencies or managing general agencies, and agents, right? These are the people that sell you insurance. I'm sure you went to high school with someone who hit you up on Facebook and was like, hey man, would love to sit down and have coffee. And then it turned into a sales pitch. That is what agents and MGAs are. Also, I just slammed the table. Sorry if that was loud. And then we have just the technology they use, the tech stacks, right? This is the onboarding process, the DocuSign, et cetera, that the agents will use to sell the carrier's insurance. What makes Hippo unique and special, and this is the key, is everything is vertically integrated. Okay, and that is a stupid buzzword that I hate. Just think everything's in-house. Okay, they make the coffee, they grow the plants, they make the beans, they dry the beans, they grind the beans, and they give you the cup of coffee. Everything is done right there in-house. So they are the carrier. Okay, they also reinsure themselves, which is, we're going to get into why that's a risk, but that's also a bonus. They're not sharing in on all these other, when you reinsure, it's a cost. So they're not having to pay all these extra costs to be part of this reinsurance group. And then the big one, then they also have their own tech stack firms. Everything is integrated for themselves because they're using AI. This is the big one though. They have almost zero agents. Okay, every insurance firm, the blood and the veins, the arteries, the important stuff of the entity is the agents. The agents being able to go out and make relationships, and the agents being able to say, hey, you should get whole life insurance, which you should never do. unless you're exceptionally wealthy, in my opinion. Honestly, probably even then you shouldn't do it. But the fact that they use AI. Everything is done on your phone. Okay, you do not have to have an agent. Because there's no agent, two things happen. One, their margins get a lot better. They're not paying anybody anything. They don't have to pay any salesman anything. There are no agents, which is beautiful. And two, it's cheaper for the customers. Because now the agent, Hippo doesn't have to pay anybody. Therefore, they will pass on that cost savings to the customer because they want to be more competitive. And therefore, the customer gets a better deal. All right. It is a beautiful, beautiful relationship. Now, there are a few caveats and risks, and I'm at 15:45, so I got about 1 minute here. They're not profitable yet. Okay. I would tell you I probably will invest in them the second I see some profitability. I think it's StockZen, or I can't remember what company it was, but there was a projection that about 2026, probably middle is what I would say, they're going to start being profitable. The second I see that, personally, I'm going to consider adding that to a lot of my growth portfolios, a lot of my clients' growth portfolios. Again, I have to say this isn't financial advice. Go do your own research, but you should, and you should get excited because this is cool stuff. Even though it's boring. Remember, boring makes money. I want you to remember that. Boring makes money. So Lemonade is their competition. Lemonade's pretty big. They're very successful. But the big advantage they have over Lemonade is that their debt to cash ratio is incredible. I think Hippo has like $10 million of actual debt, and they have $500 million of actual cash and cash-like securities. So like bonds, things that can be liquidated quickly. But that is a massive debt to cash ratio that we like. We love that. And Lemonade doesn't. Lemonade has quite a bit of debt. Traditional debt too. So that's very important. Now, the last risk I want to talk about is the fact that they are vertically integrated. Everything is in-house. They do sort of double dip on the risk side. So they're basically saying we're going to make so much money by getting rid of all these agents that we can also get rid of anybody else involved in our business. And they don't answer to anybody. An agent, right? Technically, I'm an agent because I have sold insurance in the past. I know. Please forgive me. Horrible. I was responsible to these agencies that I was selling their insurance products, right? Technically, they paid me and I answered to them. With Hippo, there is none of that, right? They don't have to deal with any carriers or agents. Everything is just in-house, and it's a beautiful, beautiful model, and it's disrupting this old, archaic industry. So old, archaic. All it really needs is just like a little flick or a little bluff, a puff, and all the dominoes will fall, and the disruptors will be the benefactors, which is going to be Lemonade and Hippo. And I like Hippo over Lemonade just because of their debt to cash ratio. And also, I mean, both are kind of cool names, but I'm going to go with the Hippo over Lemonade all day. Okay, guys, that is it. We are done. I hope you learned something. As always, invest early, invest often. We'll see you next time.